Okay, so yesterday I shared my Goldbach trading levels model on YouTube. Today I'm going to show you one of my executions, which I recorded completely live, to go through my thought processes on how I select the Goldbach levels, how I select my entries, how I select my exit, even my bias. So hopefully this will give you some insight on how to trade using my Goldbach strategies combined with ICT. Okay, so this setup gave it to you yesterday and it played out beautifully today, and it plays out pretty much every day. You just got to be aware of it. So the context of the day, DXY, I'm still bullish overall on DXY, but DXY took a monthly liquidity. So I was looking for a quick scalp as DXY fell after taking that monthly liquidity, offering a retracement to the 4-hour fair value gap. I wanted to get a scalp long on either EU or GU. So here's my live video, and I'll do the voiceover. Okay, so you can see here I've mapped out the Goldbach levels, and what I'm interested in. What I also did is I highlighted the areas where the OBs should form, and that just helps my eye a little bit, because sometimes price can move quickly and I tend to look at EU, GU, AU, I'm looking at DXY, so sometimes you can get a little bit lost, but sometimes I find that if I mark these out, I know what's going on. So immediately I spotted here that we formed a bearish order block in the OB zone, and we have potentially a fair value gap forming. Now this isn't perfect, it doesn't have to be perfect, sometimes it is spot on perfect, but as long as it's close enough, that alerts me. Now with this trade I was conscious that my higher time frame bias is bearish on EU and GU, so I just wanted a quick scalp. So I was trying to see how this played out. So you'll see, I'm seeing right here we have a 15-minute order block. Now if we're bearish, you expect order blocks to be respected. So I was hoping that we'd violate this order block, and that would give me an additional clue that maybe we are bullish for a little bit. So I'm just monitoring it, and I'm also monitoring this fair value gap to see if it actually forms. Now this is the setup I was looking for also. So what is this, the 5-minute? I was looking, there's a 1-hour order block higher up near the midnight open, and I was looking to short from that. So I'm trying to go short on GU as a higher time frame move, and I'm trying to go long on EU as a scalp. Now one of the reasons, I'm going to give a lot away today, but why not? You guys use my YouTube channel, you find it interesting, so hopefully I'm going to share some tips. I saw these equal highs down here. So this is between 3 p.m. and 4 p.m., which is the silver bullet range. And I saw these equal highs, which are normally used as targets. And right down here, you have a weekly fair value gap. So I was looking for a bounce off the H1 OB. I want the liquidity to be swept into the H1 OB. And then I want to take these equal highs into the fair value gap, and I want to take profit here. So I've got two trades in mind, which are opposing each other, which I don't recommend you do, but hey, I'm crazy. So you see here, I've also marked out the OB level, because I don't know where the trade will present on the GB level, whether it's going to be EU or GU. It normally only happens on one, and you have a leader and you have a follower. And it looked like EU was going to be the leader. So here we go. So I'm now monitoring this 15-minute order block. I want to see it violated before this candle closes, because then that gives me a hint that we are bullish, and then we have the fair value gap. And you can see I'm using the 27 power of 3. And now I'm switching to different time frames, because I didn't like how this 5-minute OB was fitting. The 3-minute, which we're on now, fits a lot better. However, it doesn't have to fit perfectly. You know, I can get the perfect one if I use a certain number. There are certain numbers that in Hoppy Lipperker's book and in the private Discord we know about. But you know, I'm not too fussy nowadays because I trust the numbers. In numbers we trust. So you'll see there the 3 minute wasn't bad, but I'm happy to stick with the 5 minute. M5 is, people say all time frames are equally important, and M5 is a very significant time frame on EU and GU. The algorithm uses the M5 for a number of things. So now I'm looking to see if we violate this OB. So I marked out the OB here, the M5 OB. There, that's where I'm anticipating the fair value gap will form. So not perfect, but close enough. Look, we violated the 15-minute OB now. So I'm bullish. There's my 55-minute fair value gap. Put my long position in, and then I switch to MetaTrader and I enter my order shortly. Now is the fun part. I'm trying to work out where I'm going to TP. That's the logical level, right, for this particular algorithm 2. But there was no logical place to TP. So we have this trend line liquidity forming. You see that? We have this trend line liquidity, so we know that was created on purpose. But where do I TP was the question. So now I'm trying to hunt for a TP target. I could use the terminus of the algorithm, but it's nice to have extra confluence. And in the back of my head, I'm also thinking, what is GU doing? Is GU bullish? Is GU bearish? And what's the DXY doing? Okay, maybe I gotta increase the speed of this. Let's increase the speed a little bit. So now I've put on my trade. Right, so that's me now on the higher time frame on the H4 EU trying to find a logical place to TP. I see this fair value gap, so maybe the algorithm's shooting for this fair value gap before it retraces. However, the fair value gap didn't give me enough pips really. I like a 1 to 2 or a 1 to 3, and that would have given me like a 1 to 1, which wasn't great. But it's important to be aware. And you'll see later that this H4 fair value gap level starts giving you clues to what the algorithm's doing. So now, still hunting for my level. So I'm trying to work out, look, if I put it on the H4, is that enough pips for me? Probably not. So I'm still trying to work out where do I TP this thing. So I put it at the logical terminus of algorithm 2. There we go. So we've hit the fair value gap level. I am now entered on the trade. Just double checking I haven't missed anything. Now I'm checking the dollar index. So I see this trend line liquidity forming. Oh, it has formed. So this is a logical place where they may take price down to take out some of this. And what are we on the 5 minute? So this is logical to take out. So this confirms my EU bias. So if we're bearish on the DXY, we're bullish on EU. There we go, equal lows. Oh no, trend line liquidity. And I just set an alert there, just in case the DXY takes the trend line liquidity before EU TPs, then I may want to manually TP EU. Okay, let's speed this up a little bit. So I don't mind it digging in. Now, I had put my stop loss under this wick. Reason being, I looked at my broker feed and this candle didn't match the forex.com. So ideally I would have put my stop loss here. So I had to put it quite low down, which I didn't like, but just because my price is 8 cap is rubbish. 8 cap is terrible. So the candles don't always match, so I have to put it in a safe place in case I get wicked out. Again, there we go. So now I'm saying, okay, need to be aware of this H4 fair value gap. And this level, you'll see it comes in handy later. This is me now planning my GU trade. So we're still on the 5 minute, but GU is bullish, but it's not doing anything with the algorithm. Seeing if there's any potential liquidity in the H4, and there's the H1OB. So this is my second trade, which I'll put on. So this is where I want to short right at the midnight open. Now initially I marked the H1OB here. Later I realized it was actually using the 2 consecutive candles. So I'm planning my short there and managing my long here. This is probably a hippo. I need to look at this. Yeah, this is a hippo, I think. I need to look at this. Hippo is an advanced concept. You're gonna have to check out the book, but you'll be blown away. ICT has never spoken about the hippo, but Hopalika has shown that ICT uses hippos. In the book, in the Discord, go check it out. Okay, can we go faster? Okay, so this was an additional, just a reminder for me why I got into this trade. We had taken the prior day low on EU, and then we had taken that monthly liquidity on the DXY. So I was expecting some kind of retrace, and this is my retrace trade. So there's the prior day low we took. Moving forward. So now I would expect some displacement. Okay, so this is the model I showed you guys yesterday, and I was trading it today. I'm now checking GU to see whether there's any confirmation of a long or a short. I'm looking at other levels. I was probably checking other DR power free numbers like this and displacement I like, and now we're moving. So do you see where you have to have conviction in your trade and put it on before it actually moves? Because catching the move is too late. You have to understand what you're looking for. So this is the model I shared with you guys, and it's playing out today. Now each one of these is a 5 minute candle. Okay, just for the people who think I'm in some kind of replay mode on my trades, I sometimes show my my MetaTrader just to show you the entry and the exit was the same as this, and there's not hindsight trading. Sometimes I do, sometimes I don't. It depends how small or big the trade is. Okay, so this is interesting now. So there's some interesting observations. So I was firstly concerned that we hit the H4 fair value gap and we started retracing. So I want confirmations now on the lower time frame and on GB levels that we are still bullish, because we could easily retrace. And my stop loss, I reduced it a little bit, but we're nowhere near break even. Oh, okay, I've spit it out myself, cool. Let's get back to a normal speed. Now we have a retracement. Now I'm not so worried about this retracement because we still have this H5 fair value gap that needs to be filled, and we could tap this this bearish candle. So you expect retracements. So there we go. So we hit the retracement exactly. So now I'm confident again that we fill the fair value gap precisely. So I'm confident that we are still bullish. Okay, now I'm checking the dollar index. I'm trying to find confluence on shorts. So it looks like we are respecting the 27 here. You see how I hit the extension? I would like to see an OB formed here, and it did form later. Okay, let's slow this down a bit. I got a bit overzealous. Okay. Interesting point for you guys. Around equilibrium, the price zips around. It whipsaws around, and it can take people out of trades. So this is why you don't want to trail your stock too closely. Once you start trading the higher time frame Goldbach levels, like a 243, or something that takes a week or two to play out, you'll start seeing that when we're around equilibrium on the Goldbach range, we start having seek and destroy days. So normally, I used to take swing trades off of the 243. So I would enter down here, and I would just see people getting chopped up when we're in equilibrium. Because on the daily, that's the seek and destroy day. So I'm not too worried now that we do this kind of stuff around equilibrium. However, I'm still bearish on the higher time frame. So I'm still more cautious than I would normally be. Because at some point I could get clapped by the higher time frame. So I'm just checking the order blocks on the DXY. You see we are bullish now on the DXY. So that goes against me. There we go. So we've got an institutional order flow entry drill. We swept this liquidity into this fair value gap. We filled it. And now we're moving bullish again. And now I'm aware of this H4 fair value gap. Can we go beyond it? So now I'm planning my GU short. So we have some short-term liquidity, short-term high, low and OB. So normally I would set my limit order here and then short it down to here. So this is the short I was planning. You see here, we haven't quite closed below the H4 fair value gap, but you see this candle touched equilibrium and bounced off equilibrium. So this is now giving us clues that we've broken above equilibrium and we're moving. However, we also touched the MB level. So we're still kind of 50-50. What's stronger, the H4 fair value gap or Goldbach? So we broke above. Where does the candle close? There we go. And we close above the H4 fair value gap. There you go. Equilibrium, showing you that the Goldbach levels are a real thing. And now we've also, the low of that candle is the bottom of the fair value gap. So moving nicely now. So these are my confirmations. Fill the fair value gap perfectly to the pip, and we bounce off the equilibrium. Checking the Australian dollar, see if I can get a trade in here. Now we've bounced off the MB level and we are really moving. So we are close to TPing finally. Now I'd set an alert on GU. There you go. So there's my alert on GU telling me once we've swept that liquidity, because when we sleep through that liquidity, all hell could break loose and we could tank. So I need to be aware of that. And sometimes when you're looking at one chart, you don't see what's going on the DXY or your sister pair. So sometimes I have to set these alerts to remind me of what's going on. And there we go. So we're starting to retrace. We bounced off the fair value gap, so it's not so bad. I'm still kind of confident in this trade. What was that? I marked something up. There we go. So now we've taken this short-term high on GU. So I would have set a limit order here, but I was so focused on EU that I forgot to do it until much later, because I want to short this bad boy down to here. Now we're tanking. So now I'm kind of thinking, was the objective to get to the liquidity void and then tank down? Technically, we should terminate here where my TP is, but this was also equal highs So now I'm thinking maybe I can get out of these equal highs and take a 1 to 2 or something, which is not bad. My stop loss is now out to break even as well. We have a balanced price range and we're above equilibrium. I don't necessarily want us to go back to the fair value gap. So that's why I'm like, cool, stop loss to break even, that's fair. Let's speed it up a little bit. So now the concentration happens, right? Where it's like, am I going full short on GU? You see I've entered GU. So I've entered my GU trade now, so it's a little bit in profit. So this is a short on GU and a long on EU. Now we've touched the breaker, the balanced price range on EU, which I don't like. And we've tanked. See, after taking that short-term low on GU, we've tanked. And now I realize it wasn't this H1 OB it was going for. It was going for this full thing. It was trying to sweep this liquidity into this H1 OB. But I'm in. I didn't get the best price because I wasn't paying attention. But I'm in the trade. There you go. So my short is increasing and my long is decreasing. Now I'm correcting my oversight. Ideally, one of my trades you would have seen a few days ago, I shorted at the midnight open. That's where I wanted to short, ideally. And that had confluence with the H1AB. But it is what it is. Sometimes you don't get the perfect entry. So managing the GU trade now. Checking I've not missed anything on the weekly. Did we take liquidity somewhere that I don't know about? I want to short down. Take these equal lows into this fair value gap. So my stop loss is still here. We bounced off the balanced price range. And we're still above equilibrium, you see? How the candle didn't want to close below equilibrium. There we go, I speed it up a little bit now. So I've reduced, so my initial TP was here at the OB. I reduced it to these equal highs, thinking maybe equal highs are the target and I can get out this trade and just think about my GU trade. And I've moved my stop loss to the bottom of this candle. Reason being is we've dipped into the BPR already. Do we really want to dip into the BPR again? I don't like this displacement. We've already had one displacement and we may displace again. So I didn't like that at all, that we're showing these bearish signs. Even though the algorithm should terminate here, you never know. It can sometimes switch on you. If you're not paying attention, you may have missed something. There you go, fair value gap. So now I've reduced my stop loss to here. If we fill this fair value gap, we're gonna dump, which means we're bearish. Otherwise, it shouldn't touch my stop loss, and we should terminate here. And my GU is getting quite heavy in profit at this point. There you go. So I'm going against the higher time frame as a scalp. So being aggressive with my stop loss. Otherwise, I normally leave the stop loss down here. I don't touch it when I'm in a Goldbach algorithm and I'm with the higher time frame. I don't touch my stop loss. I don't even put it at break even, because there's one algorithm which will go back to the OB and mitigate again. So at this point, I think I get stopped out. So this touches and stops out. Now the interesting thing is, if I'd let the trade play out, yes, it tanked all the way down to my entry, but then we did actually terminate at the OB like I wanted it to originally. And then we slammed hard. So if you don't know what the algorithm's gonna do, according to Goldbach, you might be trying to TP up here somewhere, but those of us who don't understand Goldbach, we know this particular algorithm terminates here. If you miss this TP, bang, you're getting slapped hard, right? So I didn't make a huge amount on this trade. It was a good trade. It was against the high time frame, but I made something. But I really want to illustrate the model I showed you guys yesterday and how it actually works in theory, because you know anyone can produce a chart in hindsight, but I showed you all my executions and my profit and how I managed to trade. This was the GU trade, so I made it on the GU. A bit of a wide stop because ideally I should have put my entry here, but because I was managing the EU trade at the same time, I kind of forgot. I didn't miss this one, so I put it on here for a 1.2.5, which is not bad. But yeah, that's what the high time frame was on GU. So we slapped this TP, but look how messy it was. Look how messy it was before it finally tanked on the final news. It was doing its best, and look, it gave me so many clues as to what it wanted to do. Right? It had the equal lows. You had the weekly fair value gap. Weekly fair value gap. Yeah, it created trend line liquidity. Oh, and check this out. All right, I'm going to give you something real cool. What time did it raid this short-term high? 5:50, 5:40, around that time. 5:50 is another algorithm that kicks off. So Cognito very kindly shows you the algorithm timings. So the fact that it hit 5:50 and swept this liquidity, that's why I went aggressive on my EU stop loss, because then I was expecting this thing to tank. Now it did kind of tank, but it was in a consolidation until news hit. When news hit, it took as many people out as it could. My 8-cap wick was mental. It didn't take me out of the trade, but it was high. So the idea was to take everyone out before it finally dumped. The 30-minute, showed you what was happening. If you ignore the wicks, it was obvious where we were going. So that's my GU trade, my short. My long wasn't great. I stopped out there. If I'd held, it would have went to my terminus. However, high time frame was bearish. That was your Goldbach trading levels review for Tuesday, the 26th of September, 2023. I hope you found this useful. Give me a shout on Twitter or Discord if you have any questions.